Hey everybody, good afternoon. It's great to see you here today. Welcome back to Holistiplan's webinar series. So I'm glad to see you here today. I hope everybody's having an amazing start to your holidays. I know it's a little bit crazy with kind of like the pre-Christmas stuff and all the holiday parties, but anyways, I hope you're having a fantastic day. My name is Laura Bolio. I'm the VP of Marketing here at Holistiplan. I'm joined by the incredible Debbie Taylor and also Caroline Taylor. We have an incredible webinar for you. So as always, our goal is to bring you the maximum value possible. Holistiplan's mission is to help advisors provide richer financial planning to more clients. And so today's all about that. So with that, Debbie, Caroline, I'll hand it off to you.
I love that. So thank you, Laura, and welcome future Holistiplan subscribers. And thanks for taking time out of your busy schedule to sit with us. We presented a version of this deck last week to our current subscribers, and we got great feedback on it. It was super valuable. We looked at all of the Q&A and comments afterwards. And so we are here with our future subscribers. And the hope is that you're going to see all the value that Holistiplan brings, and then the additional sessions that we're holding, like right now, and realize that probably one of the best investments you can make for your firm in 2025 is signing up with Holistiplan and integrating tax planning into your practice, because it is a change maker. And so with that, then we're going to hop in. We have Caroline Taylor here with us, and she's going to demonstrate the software in certain areas. And so, with that, then let's hop in. So what are we going to talk about today? And so I'm a big believer in truth in advertising. Oh, and by the way, for you future subscribers out there, this is the end of 2 years of doing these twice a month workshops, right? 2 years of doing this. And like Laura says, the whole goal of Holistiplan is to make you the best advisor ever. And so I'm getting a little bit sentimental. Caroline, I might get a little weepy. I think I need a tissue because this is the end of my second year. And thankfully, Holistiplan has asked us to come back. And so we're going to be doing these next year with Holistiplan. And again, we do them for current subscribers. And so for those of you that sign up, they're even that much better for the current subscribers. We share a lot of our materials, a lot of great practice management. And again, bringing you the most recent product features from Holistiplan, any updates they're making, so that you can leverage Holistiplan and really win with tax planning. I'm just going to stop for a moment here. I'm going to give you an example of how you win with tax planning. So this week, I was called in from a center of influence, and it was a retired doctor with $15 million, and $7.5 million was with one firm, and then $7.5 million was somewhere else. And I was called in to basically try to consolidate the $15 million. And the way that we're going to win is because of tax planning. This doctor has more money than he knows what to do with. He lives within his means. He's in his 80s. He's not spending. He only has one home. He's like, yeah, I could move to cash and be fine. And he's right. But how we're going to win is tax planning and positioning these assets for the next generation, and also doing tax planning for he and his wife. And so this is how you win. This is tax planning in action, bringing in possibly $7.5 to $15 million clients. So that's what we're up to. So what are we going to talk about today? We're going to talk about how to win, right? We're going to talk about how to win. But here's some things. We're going to go over some of the legal and regulatory update, and we're going to talk about tax prep letters for the new year and a way to remind clients of your great work, because whatever you're doing in January or February, they forgot about it in May or June, and they definitely forgot about it in December. And these clients are paying you a lot of money. You want to be able to remind them nicely about all of the wonderful work you've done for them. So stay with us to the end, because then we talk about that as well. So hopping in, then 7 ways to end the year strong. And basically then what we're doing is talking about some quick sort of investment and tax related and market ideas. So just sort of a little bit of a primer / reminder. And so the first thing is review your investment thesis on a regular basis. And I know that sounds sort of fluffy and you're like, yeah, of course we do that. But one day leads to another day, to a week, to a month, and things are changing. And so we've got the Fed meeting today, likely to lower rates. And with rates on a trajectory to go lower, what does that mean to clients that are sitting on a lot of cash, clients that are sitting on CDs, right? Clients that sort of have sat out this market run up. And so this is an opportunity then for you heading into 2025 to review your investment thesis about fixed income. How long should duration be? Are you short duration? And maybe you should go intermediate duration, right? Maybe you don't want to get too long with interest rates going up, but maybe you want to go from short to intermediate, right? That's just an idea. Maybe munis make sense for you. And also from an equity standpoint, a lot of your clients are very heavy tech right now. Their asset allocation is probably a little bit out of whack. And so just sort of taking stock of your investment thesis, particularly for those clients that are sitting on big cash, right? Big cash is good from a short-term standpoint, fine. But from a long-term standpoint, we know that cash is not going to be inflation and might have a negative real rate of return. And so maybe then focusing on that and having some outreach to clients. And that could be actually leveraging the Holistiplan Schedule B. And we've talked about this in previous webinars. So if you're interested, this is a big wallet share project that we did. And we talked about this, I don't know, I think in September or October, about using the Holistiplan report to identify the cash assets that your clients have, CDs, money market, and then chasing that down for wallet share. And that alone makes Holistiplan well worth it, right? That alone. We brought in millions of dollars that way. Okay, number 2, consider the impact of decreasing interest rates on client portfolios and financial plans. And we talked about that a little bit. And again, today is a big day on this, but you really should have some type of approach, some type of thought on this, because your clients are wondering and they're going to be asking you. And so something then to be addressing. The third is tax loss or tax gain trading opportunities. And so I know what you're saying. You're thinking to yourself, Debbie, these accounts are up for the last 2 years. I do not have tax loss trading opportunities, but you might, right? First of all, for new clients, I can almost guarantee you that there are tax loss trading opportunities because their former advisor probably is not as diligent as you are. And so every time a new client comes on board, we engage in tax loss trading for them because there's a lot of things in that portfolio that probably don't belong there, or at the very least, we could do tax loss trading. And so heading into the new year, maybe come up with some type of system, some type of way to track this. Do not wait until December. Do not wait until the end of the year. Yes, if you're doing it now, fine. That's good for 2024. And that's great that you're paying attention to it for your clients. But for 2025, let's be dynamic about it. And let's look at this monthly, quarterly, or certain market events. On a capital gains standpoint, let's think about clients who are in lower tax brackets, and maybe we do some capital gain harvesting. And so there's a lot of ways to look at this. And I'm not sure, Caroline, if you were going to demo doing a little tax loss trading. All right, hop to it.
Yeah. So kind of going into your households, you're going to see in Holistiplan, it's going to come up with a list of households. This is our demo account, so don't worry, none of these people are real clients. But say you click into Peter and Paula Professor, and then you scroll down, you've already uploaded their tax return from last year, and you go into their scenario analysis. You can see that once it pulls up, that I've duplicated their 2023 return, created a base case for 2024, and then change the year to 2024. Inflation assumption is 2%. And if you scroll down here, you can see that you can input, different short-term capital gains. So you can go up in here and you can put you could say they have 9,000 in short-term gains. And then you can also change here their long-term capital gains and losses. Holistiplan makes that really easy for you. And then close that and it'll change it out and show you your total capital gains right here. So you can kind of model that out for this. And then it's also just better because if you want to take short-term gains to offset long-term losses, because short-term gains are taxed higher. So, it can just help for a variety of those scenarios.
Yeah, and this is a great example. We had a new client come to us and she had a forced liquidation of like $800,000. And so we did some $800,000 of potential gains, and we went tax loss trading, mined her portfolio. She was a brand new client, little cynical, little difficult. And we were able to save her, I don't know, like $50,000 or $60,000 in that first year. And so what we did is we ran it through Holistiplan and we did a whole analysis. She did not ask for it. We did a whole analysis showing that the work we did and how much it saved her in taxes. And that completely converted her over because we did scenario analysis and we showed her that if we didn't do anything, here's the taxes she would have paid. And because we did this great tax loss trading for her and pulled out certain lots and things like that, here's how much you ended up paying in taxes. And we ended up saving you, $40,000 or $50,000 in taxes, which of course pays for our fees, several times over. And so that's the type of work that you can do when you have a great software tool. Good. All right, let's hop into the next one. My favorite topic for those of you who sat with me is Roth conversions. And again, do not wait until the end of the year. So all this tax planning is a year-round sport, is what we call it. And Roth conversions should be a year-round activity. Now, having said that, we're doing Roth conversions now in our office as well. I mean, I just signed off on a bunch today. So it's not to say that we're not going to the wire on Roth conversions through the month of December. But what I am saying is, again, this should be baked into a year-round process for you. Holistiplan will help you do this. I will help you do this. That's the point of these monthly webinars, trying to figure out how to approach it, when to approach it. And of course, if you're doing Roth conversions now, better to do them now than not do them at all. But let's think about going into 2025, how we can set this up. The other thing to think about is we've been very fortunate this year because we only had one real pullback, and it was in August, and it was like super quick. Going into 2025, I am fully expecting volatility at the very least and some pullbacks, which creates a good opportunity from a tax planning perspective. And so for those of you who are a little bit on the fence or wondering about Holistiplan or how will it show value, we have an expression at Taylor Financial Group. Caroline, do you know what the expression is, by the way?
We're always adding value.
I love that. I love that. And that is true. But what's the other thing? It has something to do with the citrus fruit.
Oh, we turn lemons into lemonade.
That's right. Thank you, Caroline. So when the market pulls back and clients are upset and concerned, what you do is you make lemonade out of lemons. And what I'm saying then is you do tax loss trading. You do Roth conversions for them, and you demonstrate to them then when the market bounces back, how much money you will have made for them, how much stronger the portfolio will be because of some of the things that you did for them. And so let's think about Roth conversions going into the new year, because there are going to be some very nice opportunities in 2025, I believe, and you want to be ready for it. So that's our Roth conversions.
And I have also something to quickly demo on this. One of the best parts about using Holistiplan is that, and just about using software, is that it can help really organize things for you. And before we used Holistiplan, we had like this gigantic Excel spreadsheet that was tracking our Roth conversions. Had we done them in the past? Are we doing them in the future? And right here in the households tab, we can just have tags, and that can show for your client, like, you did a 2024 Q4 Roth conversion for this client. You're planning to do a Roth conversion in 2025 because this is part of a multi-year plan for the client, or you're just you did a Roth conversion last year in 2023 with this tag, and that's helpful because then you're like, oh, I should probably look if I'm going to do one in the next year. And when, our firm does Roth conversions or at least looks at doing Roth conversions for the vast majority of our clients. And so that's just really helpful to have it organized. And then Holistiplan also, if you go back into scenario analysis, makes it really easy to kind of model out some of these Roth conversions. They have a whole Roth conversion section. You can just click in the Roth conversion worksheet, put in what you think your Roth conversion is going to be, and it'll, explain the incremental cost of the Roth conversion, what the Roth conversion effective rate is going to be, and that can just, again, be really helpful when you're just trying to quickly model this out and explain some things to your clients.
And I love that because we have created so many spreadsheets to try to track this, and it's interesting because I talked to Roger about it, and Roger's like, yeah, I want to get rid of those spreadsheets for you. And so one of the big things we're working on Holistiplan is helping us to manage our books more from an enterprise standpoint. And so that's a lot of what's coming in 2025, which is really exciting, which goes back to all of your clients then should be getting tax planning services. This should not be the province of the very few or somebody who's requesting it because they're going through a divorce or selling a business. The point of technology is to be bringing these services to many more people. And now Holistiplan is upping their game by helping us to even organize this better. So just a thought there. Okay, so the next thing we want to talk about, item 5, is reviewing the distribution strategies for RMDs and QCDs. And so it was announced to me this morning that we are 100% done with RMDs for the year. We work on RMDs all year. We set people up on monthly, all of that. But again, we've had a number of new clients come on board. We've brought in over $15 million in the last 2 months alone. And so there's a lot of new folks that come on board. We had to do a lot of analysis. And so today I was told we are officially done. What you want to think about going into the new year, though, is ideally these QCDs should be done before the RMDs. And so going into the new year, then, let's set these up so that we can optimize that QCD by making sure that the QCD is done before the RMD. And part of that then is educating clients and making sure your team is properly trained. That when a client calls in January and they're like, hey, I want my RMD, your team's like, okay, let's just review here. Do you do charitable giving, or you did this much last year? And we want to make sure that if you're over 70 and a half, that, or 73 and you're doing the RMDs, that the QCD comes first. And so that's the idea here is obviously we need to finish up RMDs for 2024, no question about it. But part of today's webinar is also setting ourselves up for a great 2025. And so Caroline, were you going to demo something on this for me?
You read my mind. So similar to Roth conversions, there are tags that can make this a lot easier. If there's a tag annual QCDs, then you can look at it and be like, okay, this is someone who is really charitably inclined and we're going to look at this. Apparently Patrick and Brittany Mahomes have gotten a lot older because they are age 62 and QCD eligible now. So that's something that we can look for. And then again, this is one of my favorite, tools in Holistiplan, but you can go into the IRA distributions worksheet and then you can say for, in scenario analysis, you can say, okay, I think they're going to do like a $9,000 charitable distribution. And then the QCD explainer will pop up and you can click on this. And it's basically a whole page that's just dedicated to the strategy of qualified charitable distribution. It, gives you the eligibility rules. It says, some of the ways in which it works. And then it also will explain, the difference between a taxable distribution and a QCD. So it can show some of those, deductions or tax savings or, all of those sorts of things, which, can be great for this person. It didn't decrease their tax bill, but when we do this for, our real clients, we can really see a difference. And so that's just pretty exciting and a really helpful tool that we have.
Yeah, Caroline, could you just speak up a little bit? I don't know if it's just me, but I feel like partially through this slide, I didn't hear you as well. So,
okay.
So yeah, so that's great. So thank you for demoing that. And again, making sure everybody that we look at those QCDs early on in the year. Okay, so then the next point we're going to look at is income and expenses for 2025. And so you want to have conversations with clients right up front because we want to learn about their raises and we want to learn about their bonuses. Some of your clients are going to get, $20,000. Some of them might get $100,000 or $150,000 in January or February. And so let's talk with our clients. Let's find out where their money's coming from. And also we need to understand their expenses because we've got to, set up the cash flow, set up the distribution planning for them. And so lots of good reasons that we want to get in front of our clients early on in the year. And then the next item that we want to take care of, and I said, so 7 planning tip, is we got to create our financial contingency plans for time of stress or market volatility, right? We need our emergency fund, and particularly where I think we should all be bracing for some volatility. The Fed did lower rates, it looks like, but they are saying don't expect a lot more rate cuts for next year, which seems to make sense, right? We've got to be bracing for volatility. We've got a lot going on in the political regime. We've got geopolitical issues on the international stage. We've got a market running up for 2 years. So in a way, it makes it a little bit more fragile to headline risk. So let's make sure our clients have not become complacent, and let's make sure that we've got that plan B, so that when the market pulls back, not if, but when, that your clients have enough in their liquidity bucket to draw down from. And so those are 7 planning tips for 2024/2025. All right, let's hop into tax laws, Secure Act, and some things to know. So obviously, this TCJA and the Republicans' clean sweep was a surprise to most. Basically, 12% of pollsters were predicting a Republican clean sweep, definitely a minority. And so we came in to late 2024, like many, thinking that this would be a little bit more of a balanced conversation, that the Democrats would have a seat at the table, maybe in the House of Representatives, and that's not what happened. Clean sweep with the Republicans. They're making it very clear that they want to preserve much of TCJA. And there's some little adjustments here that have been mentioned. And so we can look at those. Is what could be in play? And look, technically everything's in play, technically, right? But what could be in play based on comment is that SALT deduction. Trump has mentioned that he wants to get rid of the SALT deduction, I'm sorry, or the SALT limitation. He mentioned that while he was in Long Island. All right, who knows, right? Because we know New Yorkers, New Jersey, California, right? We know those states are very upset about the SALT limitation. So that's something to keep an eye on. It's going to be very interesting. The lifetime exclusion. And so the lifetime exclusion is now 2025, $13.99 million. So let's say 14 million to round up. So we've got that lifetime exclusion that gets adjusted for inflation. And of course, everybody thought that was at risk. And right now, it looks pretty protected. Here's what I would remind you, though, is the president's party has a tendency to lose seats in the midterm election. And so this nice euphoric state that some people are in, at least from a tax planning standpoint, all of this is temporary, right? None of this is set in stone. And so for those clients who are on the border here of the lifetime exclusion, who could be in jeopardy, or for a whole host of other reasons, they should continue to do planning, and you should be coaching them. QBI deduction, this is a big one, saves some small businesses, tens of thousands of dollars, and maybe hundreds of thousands of dollars. Keep an eye on that. And then tax bracket management. These lower individual tax brackets obviously make other types of tax planning, a lot more, facilitates that, right? And so something to be watching. All right, let's hop into Secure Act 2.0. Oh, there was a question that came across about, hey, I don't want duplicate input. I already have e-money. So we also use e-money, but with Holistiplan, you just upload the tax return. You don't have to type anything in. So you just upload the tax return, and then all that data is here for you, and you can get tax return reports, and you can do this analysis. And so anyway, I hope I answered that question for you. All right, Secure Act 2.0. So this is another one that was a little bit of a mess. So 2.0 was passed, and there are literally like 90 plus provisions in 2.0. And a lot of it is just very disparate. $1,000, of a hardship withdrawal, no penalty here, decreased penalties there, right? There's just a lot of things that they put in there. And so of the 95 or so provisions, right, which are the ones that we think are most powerful? And also just to remind you what's going to be in effect for 2025. And so a lot of changes to the RMDs, right, popping up to 73 and popping up to age 75 in 2033. Lower penalties, right, cutting the excise penalty from 50% to 25%, and no RMDs from Roth 401ks, right? Workers have the option to have their employer match treated as a Roth contribution. That always bothered me, so that's pretty cool. And allowing Roth contributions to SEPs and Simples, which is nice, providing some much needed flexibility to those small businesses and those simpler plans. Rolling over the $35,000 from a 529 to a Roth, we know about that. Lots of limitations and hoops to jump through, but certainly something that your higher net worth clients might like. to sort of set their kids up, even if it might take a few years for that to percolate. And then qualifying student loan payments can now qualify you for the match from your employer. And so here's just some high-level ideas from Secure Act 2.0. And then let's hop into a few of them in a little bit more detail. So the automatic 401k enrollment will take effect in 2025. So I want to focus on some of the things taking effect in 2025. So if there is an employer with a new plan established after December 28th, 2022, then there's automatic enrollment starting at 3%. Also, part-time workers will have more 401k access in 2025. And so they're lightening up the years from 3 years to 2 years for those plans. This next one's a biggie, is making sure that your clients take advantage of changes in catch-up contributions. And so on the next slide here, you're going to see this chart. I know it's a little bit small, but for your clients who will reach age 60, 61, 62, or 63 by the end of the calendar year, they get to make this $11,250 catch-up contribution for those 4 years. And then they have to go back to the old way of doing it, which is at $7,500. So this is like a really weird donut hole, clearly budget driven, because you're like, hey, like, why can't older people take advantage of that larger amount? So clearly this was budget driven, where they're like, yeah, we can do this for only 4 years. And then they had to pick like which 4 years that they were going to do it for. But at the end of the day, for those clients nearing retirement age, this could be a very nice boost, and you want to make sure that they're aware of it. Remember that catch-up contribution, if you were making $145,000 and the catch-up contribution had to go to a Roth. Originally, that was supposed to kick in 2024, but these actuaries, the TPA firms, the paychecks, all those, they need to make changes in their systems. And they're having a difficult time keeping up with the pace of legislation. So it's not just us that's having an issue. And so a lot of these great changes from Secure Act, I know with paychecks, because I'm currently with paychecks, they can't effectuate some of these changes. I mean, I've already asked them about it. I've asked them about it for months, and they're like, yeah, we're not able to do that yet. Like, our systems can't accommodate that. And so it's one thing for Congress to sign off on it, and it's another thing for your payroll system that has very thin margins to be able to update their system. So again, something to be talking to your clients about and having them push back on their payroll systems or HR or what have you. But that change, the Roth catch-up, is not in effect till 2026. Okay. Standardized workflows within CRM to increase efficiency. And so the next slide, I don't want to get into our action plans too much, because that is also like the next slide, very focused on leveraging Holistiplan. But what I want to highlight on the next slide here is that we want an annual service calendar. And I made a reference to that early on, where these are year-round activities. And if you sign up for a Holistiplan, we help you with all of this, right? We help lay this out in our monthly webinars. We have all kinds of materials. And then the next slide, it's just a reminder that we want to harness the full power of our contact management system. And what that could mean is using action plans to document our processes. And so 2 slides from here is where I show you then 10 standard operating procedures that every advisory firm needs. And so some of this has to do with tax planning, but some of this is getting into the mindset of building out our firm and making sure that our processes can handle what we're doing. And the idea behind processes is that if we do something more than once, we need a process behind it. So let me repeat that. If you do something more than once, you need a process. So I have a vacation checklist process. I have a conference calendar process. I have a process for all of these things because I do them more than once. And so here then are 10 standard operating procedures that every firm should have as a starting point. As we talk about lead, prospects, and discovery meetings, client onboarding. Of course, some clients leave you from time to time, so you should have a process around offboarding. Your client reviews, right, when you're meeting with clients. client services and how to deliver those services in an efficient way, client events, strategic alliances, like how are you working with centers of influence? What types of presentations are you doing with them? And do you need checklists around that? Your client service model to make sure that you're delivering on what you promised. Your team meetings. So we have a morning huddle. Well, we have an agenda around that. We have a weekly team meeting that meets every Monday. We have an agenda and a process around that. And so having a checklist and a process, even around these huddles that you have in your office. And then again, bonus idea. If you do it more than once, you need a standard operating procedure. And so heading into 2025, very much this is how you should be thinking in running your practice. Speaking about 2025, we send out, courtesy of Holistiplan, tax preparation letters for the new year. And the idea here is that you've done QCDs, you've done Roth conversions, your clients have made long-term care insurance premiums payment. They don't remember any of this. And the custodian 1099s do not reflect all of this work. It's not transparent. Again, their systems haven't been updated. The IRS hasn't told them what to do. And so sometimes these activities do not come through to the tax preparer. And so what's very helpful is Holistiplan allows us to basically gather some of this information and send out a tax prep letter. Now, we can't send this letter out until early February because 1099s come streaming in throughout February. And so we don't send this out till February, but it does take a little bit of time to put it together. It's super valuable. And so I want to give you the heads up so you can start planning around it. And so I think, Caroline, you're going to demo this.
Yes. So you can really demo this if you go into the Tools and Resources tab, and then you go into the tax letter staging, and then you can really easily toggle things in and out and create a tax letter. So for example, contributions to traditional or Roth IRAs, you can include Roth conversions if you gave to a donor advised fund. And if you scroll down here, you can just say you click charitable distributions from IRAs, that's added, and then it'll come here and you can have this whole section with all this, wording from Holistiplan. And then if you, scroll up and you have the charitable distributions, you can include the date, the description, and the amount, and then that'll come right in here. So it just makes creating these letters really, really easy. And just honestly having the list of all these sections that you can add, so you're not, trying to think of all the things that could possibly be added all the time, is very, very helpful for us. So highly recommend using the tax letters.
So on the next slide, we show you some of the things that can be included in the tax letters. And I wanted to give you sort of an extensive list on this so that you see that there's a lot that can get baked in here. And we forget about a lot of these things, and yet these are deductions for your clients. And so this could even serve as a checklist for you as to what to be pulling together. And so this is actually the template that we use for the tax preparation letters, and that we send out either to the clients or we will send them out directly to their tax preparers if they've given us permission to do that. Was there anything that you wanted to mention on this? I don't think so, Caroline, right? We demoed that. We're good, right?
Yeah.
Good. All right, let's go to the next slide. And this is super important. Reminding clients of the great work you've done. And so you could work hard all year doing this shadow work, but clients need a nudge sometimes. They need a reminder. They're busy, they're distracted. And so what we do is a couple things at the end of the year. First, we do a yearly review, and we send this out either late this month or early next month. And so on the right side of the screen is the top of our yearly review. I know it looks a little weird because the left side is the description of what we do, and then the right side is the top of our yearly review. And so if you look at that, and then if we go to the next slide, and what this shows us here is commemorating our firm accomplishments. And so here are the actual topics that we cover. And then if you look to the right here, and again, I know this is very small, but this is basically us. This is our brag sheet, right? This is our brag sheet. And we're talking to them about 52 weekly newsletters we sent out, monthly planning letters, Women in Wealth quarterly newsletters, client advisory board meetings. We held almost 200 formal meetings last year. This is for 2023. We updated, how many of your wealth match plans. And so that's our firm accomplishments year in review. We do a QT. We have some nice clip art on it. And it's really effective. And you're seeing more and more companies do that, right? I just got one today from, I think, American Express. And they're like, oh, you have, 197,000 points. And I'm like, yeah, the only reason I have 197,000 points is I spend way too much money with your, American Express card, but whatever. And like, oh, like, you dined at 50 restaurants this year, right? So you're seeing these more and more coming from different providers as the year in review concept. And so we've been doing this for several years, and you're really seeing it get some momentum. We also do a wins and wows personalized to each client at the end of the year. So this is something different. The last piece we just talked about was more general. It goes out to everyone through Constant Contact. And it's like, hey, we celebrated 50 birthdays. We sent out 100 gifts. We supported these 50 charities, right? So again, sort of your firm year in review brag sheet. The wins and wows are sent via email individually to clients. And this is like, hey, dear Susan, we performed a Roth conversion for you last year that saved you $20,000 in taxes that we estimate. We did tax loss trading that saved you $100,000 in taxes. We spoke with your mortgage broker and helped you to secure your dream of a vacation house. We met with your children and did a family planning meeting. We reviewed your tax return, right? And so we comb through our CRM, which is Salesforce, and identify wins and wows for these clients. Now, we also have other ways to organize it. And when I've taught this workshop, people say, hey, we have a separate spreadsheet that we store them on, or we have hashtags. So at the end of the year, we can just go to the hashtag and pull it down. So everybody has different ways of logging this information. No matter how you do it, I think it's still a little bit of a headache, although over time, I think AI could really be helpful here. But at the end of the day, if you go to the next slide, we have an email that we send that is very personal and really demonstrates to the clients tangible wins for the year. Any questions or thoughts on this one, Caroline?
Yeah, so as someone who works with the team to create these wins and wows recap, sometimes they can be a little bit manual. Even you look at this one, and this is a real example that I did for a client, and it can take a while to comb through Salesforce and get all of these things. But it's really just so worth it, because at the end of the day, we want clients to remember all of the things that we're doing, and there's no way that they can remember all these things. I can't remember all these things when I think of a client's name. And so we really just want to get credit for all of the work that we're doing, like Debbie said. And you can include, things like tax loss harvesting and financial plan creation, like very tangible things. But then also you can include things that are like smaller that you did, but also more meaningful. Like if you gave them a call when they had like a new child, you can say like, and congratulations on your new child. Like we can consider opening a 529, like those sorts of things that are meaningful to really connect with the clients are also just really important. And this is a great personalized way of doing that.
Love that. Yeah, thanks, Caroline. Look, I mean, this is a little bit of work to do, but it's worth it. I think it is well worth it, because how many times are clients like, hey, I didn't hear from you, or we haven't met all year. And we're like, what are you talking about? We met in September, So I think this is really, really helpful. Good.
Yeah. And also to add, we do not do this for every single client. If anyone's looking at this and being like, that would be incredibly overwhelming, we agree. But we definitely make sure to do it for, our top clients, clients we have strong relationships with, centers of influence that are also clients. So you can be strategic about this. And like everything that we say, that we do, it's better to do it for, some clients, for a portion of your book, for, people you think you're going to get the best value back from it, than just to not do it at all.
Yeah. Thanks, Caroline. Yeah. Okay. And so as we wrap up here a little bit, we've got some bonus material. And so let's take a look. It's a big part of what we're doing is, again, creating goodwill and letting clients know that we're there for them, and we're there for the causes they care about. And so maybe, Caroline, you walk us through what a new initiative that we just completed like this week.
Yes, I would love that. So this was an initiative that I was really excited about. We usually decide to donate on behalf of clients a certain amount of money each year, but we thought it would be really impactful if we sent out a little newsletter, a poll, and made it more interactive so clients could choose and vote on, the organization that they wanted to give the money to, and then we proportionally split the monies between the charities that people voted on. And so we ended up donating, a decent amount of money to the American Foundation for Suicide Prevention, as well as the Breast Cancer Research Foundation, and some of these other charities. You can Google online like best rated charities to make sure that you're choosing charities for clients to pick that are really making a big impact. And so we did that, and we held voting, and our clients really enjoyed this. And I think the more that they feel like they can participate in these kinds of things, the better it is for them, and the better it is for us.
Yeah, what's your favorite charity on this list, Caroline?
The American Foundation for Suicide Prevention, I think, is pretty incredible. And then also the Wildlife Conservation Society. So
Nice.
I love animals.
Is that because you're a mother to a cat?
Yes, that is because I have a cat that's my child. Yes. But I don't think she classifies as wildlife. I think this is more endangered animals.
Good. All right. So as we wrap up, then I like to end with a slide that's somewhat inspirational. And so here's somebody, I don't know what this thing that they're doing here on this slide. Oh, why people love Holistiplan. I forgot about this one. Yeah. So wait, let's go back. I want to, oh, yeah. Okay. Let's talk about this. So sessions are helpful, motivating, learning a ton. So I love this slide. This puts a big smile on my face. And at the bottom, the value I'm getting from Holistiplan membership is the best deal I've got going. Can't believe the marketing toolkit. So grateful. And so Holistiplan is there with you, like literally every step of the way. And they are very excited in 2025 to help you be the best advisor ever and to help grow your wallet share and get new clients. And so with that, then I know we had one. Yep.
And just one more thing to add, Debbie and I have met a lot of the Holistiplan team. We've met them at conferences, at Riskalyze this past year, and just in general interacting with them. And you really couldn't find a nicer group of people from, everyone that I've met at the organization. They're just so incredibly helpful. Anytime you have a question, and need to use the software better, anything. And that really just does make a difference. I know AI is huge, and, Googling things or whatever, but sometimes I do just need someone to explain it to me, and they really have built out, the organization to make sure that they can do that. And I think that's kind of a big differential for them.
It is a huge differential. They are an amazing team, and Holistiplan every day is investing in that team. So that's a great point. So thanks, Caroline. Okay, so with that, then I don't know if we hand this back to Laura. Oh yeah, and we've got the code. So you save 10% with the code Debbie Taylor 2024. So yeah, so any questions from the group? Laura, back to you.
Yeah, thank you guys. Thank you for saying such nice things about Holistiplan.
Oh yeah.
We appreciate you right back at you. So yeah, thank you everybody for attending. As usual, we will send out the recording, we'll send out the slides. So thank you for being here, and stay tuned because we have so much more planned for 2025. So keep an eye out in your email for upcoming webinars, more with Debbie, more with Caroline, and yep, 10% off in 2024. So if you sign up for the end of 2024, that will roll over for the calendar year of your subscription. So all right. Well, thanks everybody, and we'll see you soon. Have a great day.
Thank you. Happy holidays.
Happy holidays.